I'm here in London today with my colleague Arun Krishnakumar, and we're at the offices actually of Greenshores Capital here in the Mayfair area, and we're talking what else about Fintech. I just attended the Robo Investing event on Tuesday and Wednesday, the 10th and 11th of September. And what I'm thinking about are topics around transparency, just as the conference finished about the digital wealth management, transparency as we move into financial services that are redefining value and moving away from volume as margins get squeezed. Transparency because we're using distributed ledger technology in the fund industry. I moderated a panel there on this topic, and we discussed a very interesting progress in the industry. So Arun, transparency and value brings me to one of the investment themes that you have at Greenshores Capital, which is around Islamic banking and finance and Sharia banking. So tell us, what are the main principles in that sort of framework and thinking and business world?
First of all, great to see you here in London. And let me talk briefly about Sharia Finance. So Sharia Finance is a value-based model. As much as we would like to think it's a religiously driven model, there's lots of values that come out of it. So you can't take interest, you can't have leverage products there. There are several ethical points, like you can't have investments into gambling, pornography, and all these things are completely out of question there. So when you have some limitations around making money, it actually hinders your profit-making mechanism, right? So the key pain points here with Sharia is that the products have to be thought ground up. So if you take my portfolio company, Yielders, they've gone into real estate and crowdfunding, equity crowdfunding, and they've thought through the product completely ground up, and they're still able to provide the yields that are better than the current market and quite competitive to their conventional financial services competition. So you've got that is a challenge. I mean, not everybody can do that. The other thing is, with a lot of limitations, you also have operational challenges in terms of how quickly can I turn this around into the market, which adds to the pricing, which means you're not going to be able to give the same kind of returns to your investor base as you probably are able to do in the conventional financial services industry. So those are the key challenges. But when you start thinking about transparency in an ethical, value-based financial services space, you are going to have to provide more transparency than we've historically done in a conventional financial services market. So from that point, blockchain, in my opinion, is going to kind of bring a lot of value to this ecosystem. One is transparency, the other one is operational efficiencies. So I think those are the two areas where blockchain can help. It can help cut costs in a big way. It can help globalize the industry, for example. So again, going back to the Yielders example, we see a lot of GCC investors coming on board, and we see quite a lot of Southeast Asian investors coming on board. So if we had a single way of transacting between all these different parties, and alongside providing transparencies and operational efficiencies, it's not just about having the currency there, but it is also using blockchain for the checks and balances. It just makes it extremely efficient, cost effective, which means management costs go down, and which means more profits in the hand of the investors. So I think that's probably where the industry should be thinking and moving towards that.
Great. So transparency, rethinking where the value proposition is, as we're all doing in the financial industry. Maybe we will see that the principles that are guiding Sharia banking and practices will be actually adopted in a more widespread fashion. Distributed ledger technology could facilitate this process through the transparency, auditability, and the cost savings that are inherent. And one great example of an actual broad-scale use case of this is Calastone here in the UK, which is one of the major financial services providers in the mutual fund industry. In the administration of mutual funds, they have adopted distributed ledger technology and are offering to their B2B clients these efficiencies without them having to change anything. So no integration, no change. So again, transparency and operational efficiencies towards redesigning financial services to create value instead of volume.
Absolutely.
Thank you, Arun.
Cheers, Epic.